What's up, everybody? Michael Silva here. The bulls and the bears, they both want the same thing, and that's for the markets to go up. At least that's an unpopular opinion of mine. We're going to talk about that in today's Stock Market Brief show. Let's get into it. All right, everybody. So why would the bears and why would the bulls want the same thing to take place? Well, I'll discuss in today's episode, but first we're going to take a look at the 5-minute time frame of SPY. And you can see today was a whole lot of nothing, a big nothing burger that took place. We spiked up and we came down and we closed right outside of that expected move. This was all to be expected. If you watched yesterday's episode, we did discuss what we kind of anticipated as far as price action today, right? We're sitting here at home base being the weekly expected move, which we discussed more in detail on the prior episode, and why we probably wouldn't see much activity today unless price started to crack significantly lower, where we'd have obviously dynamic hedging kick in. So yeah, boring day overall. If we want to take a look at the dollar has actually perpetuated itself to the upside, but today it took a little bit of a stall out. Now you're going to hear a lot of people say, hey, it's a double top, but be mindful that a double top, right? Yeah, it touched twice here, but it really did, in order to be confirmed, we'd actually have to see this price go down. And more specifically, it would be nice to see it crack 105 to the downside, and that could very well perpetuate the S&P 500 up and also various commodities. We do have a negative divergence that's building, but also keep in mind that this right here could also just be, a period of consolidation or something, and could just be a cup or a basing pattern taking place. Okay, so let's continue on, and we're going to look at a couple of indicators, and I'm going to explain a little bit more, why is it, and when we get to the 65-minute time frames, why is it that the bulls and bears want the same thing right now? First and foremost, we do want to take a look at the summation index, the NASDAQ. This is the NASDAQ McClellan summation index. We have the NAMO, which is the oscillator down beneath us. I want to just call out that the trend here on the parabolic SAR did tick up above the summation index, which has led to changes in trend. Doesn't mean that they have to be a long-term trend by any means. And you can see here, right, like this one was, a few days to the downside, but it was pretty aggressive. Well, this one clicked to the upside, and it was a long, nice trend too. So you can see just by looking at this, it's the start of potentially something a little bit stronger. So that is something more to be on guard about that currently took place. But it's not just the NASDAQ summation index. You can look at the broader market too. The New York Stock Exchange did have the parabolic SAR uptick too, as we're curling back over. It takes a while for this to get back up. We would have to see some pretty strong strength. If you do take a look at the McClellan oscillator down here, the 9-mot, we did have a very strong move to the downside, which could perpetuate further downside selling, but also we're at a level where we've seen bounces from too, okay? So a couple things to just be aware of. If we take a look at a couple of the BP charts, BP NDX, it's actually playing out that divergence, and you can see here it's heading towards that 30 region, which could become an oversold territory, which could indicate, hey, if you haven't covered, here would be a good place to potentially start looking to cover, right? And we then potentially start looking for a bounce to occur, which we'll go over some charts here because a bounce does look like it could potentially happen here. If we take a look at the BP SPX, coming into the 50 region, right? The negative divergence has been playing out. Still a long way to go to 30, but 50 can potentially act as a level of calmness or potentially even support where it could potentially bounce from. So not much going on there. If we take a look at the VIX did perpetuate to the upside these last couple of trading days, right? We had a small negative divergence build out, kind of came down a little bit. It finished up slightly on the day overall. So be on guard here because we did break down through this long-term channel that we've been just kind of seeing this perpetuation to the downside. And now all of a sudden we're seeing it pop, and we still have these 3 gaps above us and one even further up at around 45. But pay attention here. This is in, this closed at 24, all right, which is pretty high, meaning we're going to see continued chop. However, if you take a look at something like VXN, which is NASDAQ volatility, this is closing right around 30, right? It was in the 30s today, closed at 29.69. This is where, tech stocks can get obviously very, very chopped up. And if you take a look at Russell volatility as well is back there at 28.96, so the upper 20s, not too far off from 30 either, okay? Another thing to call out on a weekly time frame is the volatility of volatility, which is the VVIX. And, it's Some people say don't use technical analysis on the VIX, blah, 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 blah. Sometimes I like to look at trends and various gaps. And also, even the MACD at some points, like, right, the MACD on the VIX actually gave us a heads up of a bullish crossover. And right now, on the VVIX, on the weekly time frame, so a bigger time frame, we do have a bullish crossover taking place. It is below zero, but hey, this could perpetuate itself. Boom. it's giving us a heads up notice that we might see the volatility of volatility rise here soon. Okay, and now if we compare, or if we take that into consideration, and now we look at SPIP over GOVT, and we measure and map the rate of change, right? When it's at 1.15, but when it gets to 1.3, I've noticed, I marked it with the red lines right here. You can see all the red lines to the screen, but I've noticed that when it gets there, it gives you a heads up notice that, hey, we might see pops in volatility. So you can see multiple times it's actually played out. Boom, even right here, it doesn't tell you how high volatility can go, but it has been a good indicator that we might see future volatility. And the reason why I'm bringing it up now is, well, we're not too far off, right? And if we're not too far off and it crosses back above there, is it telling us a heads up notice that, hey, could be just the start to a potential bigger pop, maybe back into the 30 range? It's a possibility, all right? We'll look at the zones of this here momentarily. Another indicator here is the Saylor to Schiff tool. The Saylor to Schiff tool is a good buy and sell indicator, or more specifically, that'd be the strategy. This is more of a risk on, risk off, indicator. When it crosses down through the 0 line, you can see the red lines here. We've seen some sell side activity, and cross down through 0, saw some sell side activity. Why don't I have a red line on right here on this sell signal, quote unquote? Well, the reason why is because the low of this prior week actually hasn't gotten taken out yet. So this could still end up turning into a false signal. Some people like to front run it. That's totally fine. My strategy, I just stick with it, right? So if the week gets taken out, the low of this week gets taken out, that is actually the official sell signal for my specific strategy, which, by the way, you can create a better strategy than the one that I'm using, but that's just the reason why as far as right now. So what would create a false signal? Well, a false signal would be if this doesn't get taken out and then we get a buy signal. Or, right, if this stays down here, but this low, then we have a higher low and then a higher low, and we're still down here, I would just be moving the stops up to each week as they progress up until the fact that it gets back above 0. Then it would be considered a false signal. Unless, it keeps on going up and then one of the weeks is taken out, then this would be an activated sell signal. Okay, so I hope that makes sense. I have a whole video on that. It's in the description below. Another thing that we called out here was the rate of change between growth and value. It is below 0. It gave us a heads up. We talked about it. We talked about it here. We talked about it there, and we got faked out multiple times. But now we had that official cross through. We had the weakness show up. Now it's starting to curl back around. So, we've seen this kind of action before, and it could, throw some chop and some sideways action. So we'll see if this crosses back above, and if that is just, a point where we can potentially see a bounce. You got to just be prepared for that. All right, so let's take a look at the 65-minute time frames now before we get into the anchored VWAP. So I'm going to explain here, why is it that the bulls and the bears want the same thing to happen? And you can really kind of see this here. So first and foremost, why would the bulls want to see price action go up, right? They both want price action to go up at this particular point in time. First and foremost, we saw some wicked sell side activity in just a short period of time. So the bulls that were holding in, or maybe bought through up in this region, even up through here on this breakout right here, right? So the breakaway gap could be turning into an exhaustion gap. The bulls want to see price get up to see potentially to exit those positions, because some bulls, they'll hold on and then they'll hope that price reaches back up, right? So there could be very well some trapped supply up in this area. So they're waiting, they want the price to go up. Why would the bears want the price to go up and not to go down further? Well, because we saw such an aggressive move in a very quick period of time, it left a lot of people that are trying to get bearish positions out of a position. So what they want to see, instead of shorting into the hole, they're going to be patient, and they want to see price go higher. And if price goes higher, it'll allow them to really position themselves better to see, from a risk to reward standpoint, to see price go down. So what would something look like? Well, we talked about that on yesterday's video. First and foremost, it does look like we can get a potential bounce here, okay? We see stuff like these positive divergences building. The PMO, it's starting to curl back over, right? We have some economic drop. We had the Fed is going to be talking, Jerome Powell's going to be talking on Friday, which is quite a ways away. So if we do see some sort of pop, what you want to watch for is this 5-day moving average. It is now declining, okay? So you want to see price, if it pops up, you want to see, it potentially cross back above, maybe here, and then if it starts crossing back down, that could be a good short area. But also from a bullish perspective, if you want to see price go like this, it might pop up, might cross back down, boom, and then you can actually, if it crosses back up through that, you can play it with a stop loss there, and then you could play to the upside. Okay, so there's multiple ways to play this, but as it stands right now, both bulls and bears, for better positioning, right, to get out of a position and to get a better position, would like to see price go up, right? If price just crashes down from this point, it's going to leave a lot of bears not being able to get into a position, and we'll probably see some more extreme movements, right? We talked about a potential 2 sigma move, which is still a strong possibility, but we discussed that on yesterday's episode. If you take a look at the Qs, it's the very same situation, right? We're right there at that weekly expected move. Price is just doodling around. So if price gets out further from these, price continues to move, we're going to have dynamic hedging take place, which could perpetuate a squeeze to the downside, okay? So I'm not expecting that to happen, but you got to leave that as a possibility to take place. We do have a positive divergence building there. The PMO is starting to curl back over. So, it's always a possibility to see some type of move to the upside. Now, if we are going to hang on to this like we did today, you got to understand also from a bullish perspective, we might see pops intraday, but there's a strong possibility that we get pulled right back into this too as well, right? What do you think the Fed's going to say, right? Do you think the Fed's going to talk about pivoting? I personally don't. We'll see how the market interprets it, either it's, dovish or hawkish, right? Are they bullish, they bearish, whatever the case is. It really depends on what the market perceives it as. We can have our own opinion, our own narrative, but it really comes down to what is price doing. And keep in mind, when the news comes out, when you start talking, you typically get knee-jerk reactions, similar to what we saw today on the PMI flash. If you take a look here, IWM is actually holding up relatively strong. It hasn't tagged. It's actually lower weekly expected move. We do have a positive divergence building there. So keep an eye out. It looks like it's, going to strike it at some point this week, so we'll see here if it does. But if we start popping to the upside, look at that 5-day moving average, which is currently declining at this given time. Now we're going to map out some anchored VWAP levels. I want to follow through with this. I'm going to go over a few things here. The gray shaded area, that's the 5-day moving average. So what you'll notice is, that's the same thing as on the prior slide. We're below it, so we're in the gray shaded area is what that means. The yellow line is the month-to-date anchored VWAP. So we are below the average volume weighted price on starting August 1st. So we anchored it there. And then this is where the rally really kind of kicked into high gear for the SPY. And we've been talking about this potential gap that we can look at for a potential area level of interest and support, because we saw this big move with some good volume. It could very well, price can pull into that area and we could see a bounce from that level. Not saying that that's going to happen today, tomorrow, or the next day, but we want to keep that in mind. The next big level, and by the way, sorry, I didn't even mention, I talked about this anchor. You can see price is actually trading below that level right now, which is 415.60, and it did hold as a level of resistance today. All right, so the level that I added on the screen here is at 395.75. What is that? We're just anchoring to the prior low. Okay, this is the low of the year. Okay, so this is, everyone's freaking out, and then we rallied. So this right here is price right around 395.75 at this current point in time. You can see it's acted as support, price doodle around, acted as support, and boom, we haven't touched it since. So if price starts diving further down, this will be a key level, and that is actually closely in line with that gap fill too. So a big level of interest, big level of confluence to be aware of. Okay, if we look at the Qs, you can see we're below the 5-day. We already discussed. It's below where the rally really kicked off, and it's below the month to date, right? So not the greatest look overall. So if we get further sell side activity, let's take a look at that gap and where that lines up in comparison with the bottom right here. Okay, and you can see that's at 362. So we'll call, just say 300. It's a nice, easy round number. So if price starts getting down within this area and fills this gap, it's a very big level of interest. All right. Now, keep in mind, we talked on prior episodes, remember, about breakaway gaps. All right. That's where price is basically consolidating and then all of a sudden gaps up and starts running away. But we also discussed, hey, what comes after a breakaway gap? An exhaustion gap can take place. So as we got a breakaway gap, now what we're seeing is an exhaustion gap take place where this prior gap is getting filled. Well, supposedly getting filled, right? There's a big air pocket there. You can call this maybe an island reversal pattern where, marks a top. But we'll see here if that gets backfilled. That would actually be pretty good, in my opinion, to see a backfill of that and see how price. But this right here so far is acting as an exhaustion gap, meaning that this run is coming to an end, which could see further downside, okay? Not to say that we can't bounce here, which we're already discussing all those positive divergence and so forth. But if we take a look at the IWM, still below that 5-day moving average, and also It's below the month to date, and it's below where the rally started kicking off into high gear too as well. It's kind of dueling around that area, right? Kind of flagging potentially. So if we get further downside sell side activity, which means we'd have to break through the weekly expected move, we would want to see what could potentially take place if it comes in to try to fill that gap, which is right around that low anchored VWAP right there, okay, which is at what we're going to call it 178. So these are all levels. You can screenshot this and mark these levels down. They're levels of interest. We'll bring them back up in the meantime, and follow up future episodes. If we take a look at the zones now, we're looking at the zones for tomorrow. There's just a couple of things going on here that I wanted to point out. First and foremost, some stuff like ARC has been completely destroyed, right? So at a time we were seeing this, and this is, if you don't know what these are, I share these on my Patreon group. It's really just something that I've been working with. I don't actually list it as a benefit here, part of my Patreon group, which is $9 a month if you don't know that. And by the way, if you're trying to sign up for the $9 a month, I wouldn't do it right now just because at the Patreon charges $1 or charges on the first of every month. So if you pay $9 now, you're going to get charged again, unless if you do it annually. Okay. But I don't list it as a benefit here because I'm trialing and testing it out. I'm using it to help manage and watch where risk and reward is. And ARC at a time, it was showing us that the downside was getting really, really big. So the downside number was large. So I kept on watching that chart and, the absolute performance of it. Well, now, we started marking that off in our Patreon group. And now what we're seeing is the flip, the reverse, right? We saw some massive downside. So the upside is now 22% versus the downside of 3%. Now, this doesn't mean that it's going to go up 22.8%. You just got to understand where it lies within these zones, okay? And the midline has been acting, that I've seen previously and noted, that the midline does typically act as an area of resistance to be aware of. So the current close was 43.37. So if we do start moving up higher, this 47.67, which is dynamic, it constantly moves, okay, every day and during the day too, can be a level of resistance to keep in mind for. So we're just getting some, obviously what this is telling me in short, we're seeing some large moves to the downside. So it's possible here that this is where we're going to start seeing some short coverings, potentially see some sort of a bounce, and then that is where we start realigning of where we can potentially have greater reward versus the risk in the market. So hopefully I get some insight. I guess one other one was HYG, right? HYG was up today. That's high yield. All right, and right now it's showing upside at 3.76. Downside is 0.5%, and you can see we closed at 76.27. And, that's just under the midline of 77.51. The upside here is 79.14. So we'll see if it can break through the mid as we're starting to get some sort of a bounce taking place. At least it looked like today, despite the market being down. I'm not going to dive too much into that divergence at this given time, but hope today's episode helped out, gave you some insight as to what it is that I'm seeing and why both the bulls and the bears want the same thing to happen right now. See you later.